Hi there, good afternoon. You've tuned into ET now, and this is Market Fatafat with me, Cheryl D'Souza, and along with me I have Vinny Motiwala. Very good afternoon to you, Vinny. And markets are doing absolutely nothing. Pretty flat trading session coming in for the benchmark indices. Flat and a range-bound actually trading session coming in for the benchmark indices. Lack of cues coming in for the US markets because they were shut for trade yesterday. Today is when the US markets will open. However, the futures are also pretty flat in trade. Remember the US debt ceiling, that particular tentative deal has been arrived at, but we will get some more details on that come today or this evening. Let's take a look at what the rest of the markets are doing right now. Nifty Bank moving in tandem with benchmark indices. Broader markets seeing tad bit of better moves than the benchmark indices as we speak. Talking of the sectoral losers, you have metal index, that's the top sectoral loser, that's losing about 0.6%, followed by energy, PSU and pharma, which are seeing mild shade of red on the screen. Talking about the gainers then, you have media index that's seeing gains of about 0.8%, FMCG holding on to strong gains of about 0.6%. IT has recovered from the day's lowest point. IT index now actually trading with a positive bias. But that's the way how the markets are looking like when they absolutely been lackluster through the course of the day. Hopefully that's the way how we will be sustain those levels, maintain those levels on the Nifty and shut shop for trade in the next 2 hours.
Absolutely, surely keeping an eye out on that. But on that note, let's get started with all those stocks, that are buzzing in trade or in focus, either on the back of news flows or on technicals as well. Today from the research team, we have Lisa joining in with us while Shesha will join in with us as well. I believe it's Shesha joining in with us as well. But let's move on and let me start with the first stock that we're going to be talking about. And we have Aurobindo. Oh, it's Vamakshi. Yes, I can see Vamakshi. I was very confused. Okay, so Vamakshi and Lisa, both of them joining in with us, while we have Amar Singh on the technicals who is joining in with us as well. A very good afternoon to all three of y'all. And I'm going to start with the first stock, then that is Aurobindo Pharma. Now, what we saw is after the numbers, the stock actually saw a fall coming in. And today, what we're seeing is a rise. Why is that so? One, the numbers were not a bad set of numbers that came in from the company, and we have brokerage notes that have come in, which have actually upped the target price. Now, Goldman Sachs has come out with a note on Aurobindo Pharma. They're maintaining a buy, hike the target price to 680 rupees per share from previous 610 rupees per share. Strong commentary is what they are hinting at in terms of the company in the near term, and the tailwinds are there as well. They've hiked the EPS estimates by for FY24 and FY26 by 7 to 17% to factor in the revised outlook, and discontinued valuations allies most of the concerns around the pricing pressure, plant status as well. Now, other than that, BOFA also has come out with a note. They are maintaining a buy as well, given a target price of 725 rupees per share from the previous target price, which was 650 rupees per share. EBITDA margins tad bit lower, but positive commentary, improving generics environment, which will start reflecting in the first half of FY24, is keeping BOFA also positive on the stock.
All right, so that's Aurobindo Pharma for you. That's on the back of what brokerages have to say. Also, yes, the numbers were not that disappointing. But Amar, coming to you, Aurobindo, on the technical side, is it flashing a big buy sign? No doubt we've seen a sharp rally in this particular counter. Very silently, if you see, Aurobindo Pharma has actually moved up from those sub 400 levels.
Yeah, you are right. The stock did consolidate around the 450 mark, and then there was a significant breakout. And then again, the stock consolidated around the 600, 580 mark, and now we've seen some decent rally. So what we are witnessing technically on the charts is that on the weekly charts, the stock continues to display very strong momentum. So that's one positive aspect. Even on the monthly charts, some of the indicators have pointed towards an upside, but the stock, for any major significant upside, the stock needs to sustain above the 660 mark. So it's currently around 645, not very far from that level. That's a very crucial technical level. So the stock needs to sustain above 660, then it has a potential to rally towards the 720, 725 mark. As far as support is concerned, the stock has now formed very strong support around the 580 mark.
Okay, let's move on. And Vamakshi, Force Motors also in focus today. Why is that so?
Very strong set of numbers that are coming for this counter, and that is the reason why the stock, if you see, is locked in the upper circuit of 20% since early morning trade. In fact, with this, the stock has hit its 52-week high on the back of a robust performance that the company reported in the fourth quarter. Now, the company has reported a profit in the fourth quarter as compared to a loss on a year-on-year basis as well as a sequential basis. The company has reported profit on back of higher other income as well as exceptional profit of almost 208 crores. The exceptional income being government incentives as per the Madhya Pradesh Industrial Investment Promotional Assistance Scheme of 2010 that was recognized on the basis of sanction of orders received for the month of March 2023 for the years 2017 to 2018 as well as 2020 to 2021. So strong set of numbers overall for Force Motors is the reason why the stock is in focus today. The stock, as you can see, is locked in the upper circuit.
All right, so that's the take coming in on Force Motors. While Force Motors is surging in trade, on the other hand, you have Ujjivan Pharma that's getting knocked out of the park in today's trading session. If you look at the way how the stock is trading, much lower, Lisa, a lot of factors apart from earnings that is weighing on the stock, isn't it?
Yes, on the back of two triggers, Ujjivan Pharma is down nearly 7%. Let's look at the earnings first. The earnings were quite mixed. The revenue was up 9% on year-on-year basis. But if you look at the margin, that contracted, and also the net loss that widened to 100 crore versus a profit of 59 crore last year. And even last quarter, they saw a loss of around 16 crore. The bottom line was impacted because of higher expenses and also exceptional items. The depreciation finance cost, that was high. Finance cost was up 41% on year-on-year basis. And the company stated that their generic and CDMO business that remains under pressure. Also, the net debt that also saw an increase. It increased to 219 crore versus 195 crore last year. Well, on their Montreal, Canada facility, that has been classified as official action indicated, and it may the FDA may withhold any approval of pending applications. And Jubilant had plans to double this facility in the next 5 years. So it's kind of a mixed figure for Jubilant Pharma. And along with this, import alert at the Roorkee facility also continues. So a long list of negatives factored in for Jubilant Pharma, and that is why we can see negative reaction on the stock.
That's why the negative reaction coming in there. But let's talk about HDFC AMC on the charts then, Amar. And obviously 6 months back when you saw it, when you see the returns as of now also, it's seen a decline there. But in the last 1 month, seems like this one is finally again picking up the pace. What are the targets that you're keeping an eye out on, and is it the right time to actually enter HDFC AMC now?
Yeah, I would say looking at HDFC, what we've seen that the stock has really rallied from almost 1700 levels to currently around 1950 odd levels. And technically, I would say that the stock was significantly beaten down from 2300 levels and then to 1700. And if I look at the charts, it clearly tells me that there is more upside to the stock. But one needs to be slightly cautious because on the long-term charts, when I'm talking on the long-term charts, I'm primarily referring to the quarterly or the monthly chart. So that clearly displays that the stock has got very strong resistance coming at around 2050, 2100 level. So that's the level where there could be profit booking in the stock because the stock could consolidate before going up further. And as far as the base is concerned, the stock has formed a very strong base around the 1800 mark.
Okay, let's move on and actually let's just mark the numbers that are flashing in on our screens as well, and that is landmark cars. When you look at it in terms of the profits of the company coming in at 24 crores versus 19 crores last year, we've seen a sharp jump coming in the stock price as well. Post the numbers, revenue is seeing a sharp growth as well, 854 crores versus 727 crores.
This only goes to prove how luxury is very much in demand, irrespective of what inflationary pressures are we talking about.
Yeah, absolutely. But those, you always say those rich becoming richer. That's the fact that I think we are seeing right now. Coming in, landmark cars surely doing well in trade as well. Yeah. Up almost 3%, and good set of numbers seems like coming in from the company. Let's move on then and talk about Eureka Forbes on the other hand. When you look at the numbers, this time around, it was a strong set of numbers. Operating margins coming in at somewhere around 10.4%. In terms of revenues, year-on-year basis, strong growth of 36% is what we're seeing, coming in at 510 crores. Quarter-on-quarter basis also, the company has seen an improvement coming in. Gross margins are at 60.6% versus 58.6% last year. So improvement in the gross margins as well as improvement in the operating margins is what we saw. Improvement in operating margins is by around 500 basis points on a year-on-year basis. Strong performance coming in there. Obviously, let's not forget Pratik Kota, who was previously at Jubilant Foodworks, is now taken charge of Eureka Forbes. We are seeing that the con call will be happening shortly as well. So waiting for some highlights coming make on that front as well, Cheryl. But stock doing absolutely fantastic, up 11%.
All right, let's talk about a stock that's doing exactly opposite of Eureka Forbes in trade today, and that is Stovecraft. If you look at that particular counter, it's actually declining in trade. At one point in time, the stock was down over 12%, and that because the company actually swung to a loss in the quarter gone by. So like I said, 12.3% is how much it fell on an intraday basis. That was the sharpest intraday percentage loss coming in for the counter since February 3rd. The company reported a loss of about 6 crore rupees as compared to a profit of about 8.6 crore rupees a year ago. Revenue from operations rose by 6.4% on a year-on-year, but total expenses, that's the one that you need to watch out for, because that saw an uptick of approximately 14%. This is due to the rise in the input cost, and that's had a massive impact on the stock, on the numbers, posting a loss of the quarter gone by, 11% downtick coming in for Stovecraft.
Okay, that's Stovecraft for you. Let's move on to the next one. And Mamakshi, Ujjivan Small Finance Bank is the stock that you picked out for us. What is the reason for this being in focus?
Well, Vinny, the stock is soaring in trade today. Now, the company in fact hit its 52-week high after the company informed Indian bourses that RBI has withdrawn the nominee director from the company's board. Now, this is a very positive indicator that the RBI oversight has now been removed from the bank. Now, Ujjivan Small Finance share price today opened with an upside gap, and in fact went on to hit those 52-week high levels after the company said that they had withdrawn the nominee director from the company's board. Now they had appointed Mr. P. Raghunath, who was the then general manager of RBI Bengaluru regional office, as the additional director on the board for a period of 2 years. He was actually the RBI has actually advised that Mr. P. Raghunathan shall now cease to be the additional director on the board of the bank with immediate effect, that is from May 29 to 2023. So that is the news flow surrounding Ujjivan Small Finance Bank, and that is the reason why the stock is up nearly 7% in trade today.
Alright, that is Ujjivan Small Finance Bank, but let's talk about another counter, that is Ujjivan Financial. Amar, how is this one looking on the charts to you?
Yeah, I would say that looking at Ujjivan Financials, this also, the stock has moved up significantly from almost the 240, 250 levels, currently around 366 or so. So this also is very strong on the charts, be it the long term or the short term. Short term, we've seen a build up of momentum, and also we've seen a significant increase in volumes over the last few trading sessions. So interesting to see that from almost the 11th of May, 11th, 12th May, we've seen a significant jump in volumes on a daily basis, be it delivery volumes or the intraday volumes. So clearly shows that there is interest which is building up in the stock, and the stock now has the potential to rally. If you look at it, the stock has a potential to rally towards its earlier highs of close to 400, 420 levels in the short term.
Keep an eye out on Ujjivan and those levels over there. Let's move on, talk about Techno Electric at stock number 10. Lisa, what is the reason for you picking out this stock today?
Set of results, Winnie. Techno Electric, they posted a net profit which was up 50% on year-on-year basis. But if we look at the revenue numbers, that almost halved to 185 crore versus 300 crore last year. Also, EBITDA margin, that was flat on year-on-year basis and stood at 13%. Even on sequential basis, last quarter was 17%, while this quarter was 13%. So the stock, it hit a low of around 343 per share. And it almost saw a fall of around 15% in early morning trade, but since then it has recovered, but still trading with a negative bias as we speak. The order book, that remains quite healthy. It stood at around 4,000 crore versus 1,500 crore last year. So revenue visibility, that looks positive for the medium term. So that's on Techno Electric for today.
So that is Techno Electric for you, that has recovered from the day's lowest point. Nevertheless, is seeing a decline of approximately 4% as we speak. But there is one space that's really buzzing, and how much ever we will want to say that India Cements is buzzing because CSK won yesterday the IPL, the 5th trophy, but there is no correlation to that, no doubt. It's a owner of CSK, a part owner of CSK team. But on the charts, what is India Cement reflecting? Do you think that they will soar higher and surprise the market like the way how CSK did in yesterday's edition of the match?
I would say markets are always full of surprises, so we'll have to watch out for that. But yes, having said that, I would say India Cements, what we are seeing is that technically the stock has formed a very strong base around the 180, 200 mark. So we are seeing that somewhere immediate, a very short-term resistance is around 205 odd levels. So if the stock is able to sustain above 205, then we could see an immediate 10 to 15% rally in the stock towards 225 to 30 odd levels. And what we are seeing is that volume is also increased. The stock is has moved from oversold territory on the long-term charts as well, and the weekly and the daily charts are showing some signs of positive momentum. But one needs to watch out for the stock sustaining above the 205 level.
Okay, Kiran rally to 225 to 230. That's the word coming in there from Amar Singh. But let's move on and talk about Jamna Auto. This one is in focus on the back of its numbers. When you look at the revenue, very mild revenue growth of 1.3% is what we're seeing on a year-on-year basis. Profits almost flattish. Actually seeing a decline over there, 7% decline on a year-on-year basis. While in terms of the operating performance also, what we're seeing is weakness coming in there as well, because EBITDA is at 82 crores versus 88 crores, and margins seeing a 100 basis point contraction. So yes, the margins, EBITDA margins at 13% versus 14% last year, and weakness that we are seeing in the numbers is keeping the stock down as well, trading with a decline of 2.2% in trade share.
All right, that's Jamna Auto for you. Some more earnings then. And Rail Vikas Nigam, remember that this one has had a great run in the market, surprising everybody. But the numbers are one that disappointed the street in today's trading session. 5% downtick, locked in the lower circuit of 5%. That is Rail Vikas Nigam for you. Biggest intraday drop since May 19th coming in for this particular account. If you look at the consolidated net profit, saw a 5% drop. That is coming in at around 359 crore rupees. If you look at the revenue from operation, dropped by 11.2%, coming in at around 5,720 crore rupees, and the 11% drop is on a year-on-year basis. So yes, a disappointing set of numbers is what has actually taken the stock down, locked in the low circuit of 5%. That is Rail Vikas Nigam for you.
Okay, let's move on to Kopran. And Amar, this is not a stock that we have spoken a lot about before. But when I'm looking at the charts, you know, last 1-2 years, it was absolutely just a decline that was coming in. And just today, we're seeing the stock is up 6%. Last week, the stock has seen some gains coming in. So finally, could we say that this is going to turn around from here on, and this uptick that we're seeing today is here to last?
I would say that looking at the stock is still down by more than 50% from its all-time highs of 350 odd levels. So what we see technically on the charts, on the weekly charts, is that the stock seems to have formed a very strong base around the 100 and 120 zone. Currently, it's around 152 odd levels. So the stock, for any meaningful rally, the stock needs to sustain above the 160, 165 zone, because that's going to act as an immediate zone of resistance. Because if you look at from the base, the stock is up by almost 50%, from 100 to almost 150, 52. So for any meaningful rally, the stock needs to sustain over the 165 mark. Sustaining over the 165, then yes, the stock has a potential to rally in a short span of time towards the 185, 190 levels, but still a far cry from its record heights.
All right, that is Kopran for you. Some more upside is what Amar is envisaging, only if the stock is able to sustain this 160 rupees level. But Vamakshi, let's talk about Inox Wind, and why is this one in focus today?
This counter is in focus after the company came out with an announcement. They have announced that the company has bagged a repeat order of 150 megawatts from NTPC Renewable Energy Limited, which happens to be a subsidiary of NTPC. The project shall be executed in the state of Gujarat, and in fact Inox Wind will be responsible for operations as well as maintenance services for the project. Now with this order that has now come in, the total orders from NTPC stand at almost 550 megawatt till date. So that is the news flow surrounding Inox Wind, and that is the reason why the stock is surging away in trade today. As of now, trading near the day's highest point, up nearly 6.5%.
Let's move on then and talk about Campus Activewear, Lisa. How are the numbers for this one, and what is the stock currently doing?
muted set of numbers which were being reported by Campus Activewear. The counter saw selling pressure today on the back of weak results. If we look at the revenue and PAT numbers, they were flat, but margin that saw contraction of 16% versus 22% last year, and this contraction was mainly because of higher expenses owing to the higher SGA expenses. They spend more towards ad spends, promotion, as also doubling of stores and warehousing rent. So this stock, which was listed last year, even the price right now, it's at around 336, and it's below the listing price of around 360. Even on YTD basis, the stock has dipped more than 17% versus the benchmark indices, which dipped just 2% on YTD basis. So that's on Campus Activewear. It's trading, it's down around 6% on the back of weak set of results.
All right, that is Campus Activewear for you. But Amar, let's talk about an infra play, that's ITD Cementation. How is this one looking on the charts to you? Do you see a further upside in this one?
I would say this is one stock which is extremely strong on the, I would say, different time frames, be it the monthly charts or the weekly charts. Given the short-term charts, we did see a breather in the stock. And but currently, again, it's up towards 154, 155 odd levels. And if we go back, and we see that it has reached its high of December. So clearly shows that there is more strong bullish momentum that is awaiting the stock. And technically, if you look at it, the volumes have also been significantly higher over the last, I would say, couple of weeks. So that further brings higher confidence in the stock. So the stock sustaining over the 155 odd level has a potential to rally towards 175, 180 odd levels. So any dip or correction in the stock can be used as a buying opportunity. The stock seems to have formed a strong base around the 135, 140 mark in the short term.
Okay, let's move on to the next one, and Amber Enterprises. Let's talk about that because we have a brokerage note that has come in from Jefferies, where they're maintaining a buy rating on this one with a target price of 3,120 rupees per share. What they're saying is that the domestic AC industry is likely poised for a multi-year growth. Diversification would mitigate the sales seasonality, which Amber still faces, while in terms of the peak capex is likely to be behind, and the return on capital employed is to rise to 19% by FY26. So on the back of this, we've seen a jump up coming in the stock price. As of now, also it's trading with gains of almost 0.9% in trade share.
All right, moving on, let's talk about Time Technocraft then, and this particular counter is in focus on back office numbers. At one point in time, if you look at the stock price, it is down 14%. Now it has actually fallen much more than that, almost 18.5%. Biggest intraday drop since 2021 coming in for the company. The company reported a 30.1% decline in the consolidated net profit, as well as a 13.2% year-on-year decline in the revenue from operations. Apart from that, the company has also approved setting up of 2 new units in the scaffolding division. But yes, that doesn't seem to have enthused the market. The problem is that the earnings are pretty dismal coming in for Technocraft, and you can see that reflection in the stock price. The stock is now down about 18% as we speak.
Okay, keeping an eye out on that one. But Amar, Valiant Organics, this is surely making a list of the technical analysts again. And obviously, because we've seen a sharp fall coming in this one in the last year or a couple of years when you look at it. Finally, a turnaround is what you are also expecting here.
Yeah, I would say that the stock was in a secular bear trend, and what we have seen is that over the past few months in particular, we've seen the stock forming a base on the towards the 450, 500 mark, and currently the stock is approaching the 600 mark. So technically, I would say that one still needs to be slightly cautious on the stock because the long-term charts still are displaying some sort of, they are still, I would say, negative. But from the medium-term and the short-term perspective, clearly shows that the stock is showing signs of bullish momentum. So the stock, in order to sustain or move, witness a big rally, needs to sustain over the 600, 610 mark, because technically 600, 610 is going to act as a very strong resistance on the monthly chart. So if it stays above that level, then we could expect the stock to rally towards 700, 750 mark.
Exactly, that's Valiant Organics for you. Let's take a look at the Marksans Farmers numbers that are flashing on the bottom of the screen. A stellar set of numbers coming in for Marksans, and that's exactly going to be reflecting in the stock price as well. 5.8% uptick coming from Marksans Pharma. If you look at the profit number, it is more than doubled actually. It is 82.7 crore rupees against 29.6 crore rupees a year ago. So on back of these stellar set of numbers, as you can see, the stock is just soaring. 6% uptick right now coming in for Marksans Pharma. We would wait for finer details coming in on the numbers, but yes, the profit, spectacular profit number, Vinny, as we can see.
And obviously the newly listed company also, so, sorry, I beg your pardon, that's my but yes.
That's Denmark Life, yes.
Yes.
All of them are part of that family anyway.
Yes, but good set of numbers from this one surely is a very good indication coming in for this. And 6% uptick is what
Let's not forget, even you had Aurobindo numbers also, they were also pretty good. So the street was giving a thumbs up on this one. If you look at the revenue number, 16.2% uptick coming in for revenues for Marksans, and now the stock is trading higher by about 8%. If you look at the refresh screen of Marksans Pharma, the stock is trading higher by about 8% as we speak. So yes, good set of numbers coming in for Marksans. EBITDA margin, a sharp jump, 22.5% versus 15.2% on a year-on-year basis, and the stock is definitely, and the street is definitely giving a thumbs up and cheering for this one.
Okay, absolutely. Keeping an eye on this one. Strong numbers coming in from the company. Overall performance has been strong and reaching the 10% mark as well, the stock price.
Yes,
as every minute that is passing by, the stock price is increasing. But let's move on to the next one. And Shriram Properties, Vamak Shrivas, this one in focus.
In focus after a weak set of numbers that the company reported in the fourth quarter. Revenue did see a downtick of almost 43% on a year-on-year basis. It has declined from 205 crores to 118 crores. The company also reported an EBITDA loss of 8 crores versus an EBITDA of almost 64 crores. Net profit also saw a sharp hit of almost 76.5% on a year-on-year basis, declining from 65 crores to 15 crores. Now, when we look at the operational performance of the company, they have reported sales volume of nearly 4 million square feet in the last fiscal, which is in fact a new record. The sales value reached a new lifetime high of almost 1,846 crores, an uptick of almost 25% on a year-on-year basis, and this in turn was supported by higher volumes, better realization, change in the product mix, as well as the impact of 7 successful launches. The management said they appear to be quite confident of sustained improvement in earnings as well as profitability. But a weak set of numbers is what the company has reported, 76% year-on-year decline as far as the net profit is concerned, and that is the reason why the stock is trading under pressure today, down nearly 5%, as you can see.
All right, that's Shriram Properties for you, declined by about 4.9%. Marksans Pharma now soaring 10%. Lisa, NHPC, another earnings candidate?
Absolutely. NHPC has reported good set of numbers. At one point, it was up around 5%, but then it has cooled off since then. If you look at the numbers, the revenue was up 21% on year-on-year basis. Even the EBITDA margin, that has expanded to 44% versus 31% last year. And they also reported net profit, which saw a growth of 37% on year-on-year basis. Well, analysts are quite bullish on the stock. Of all the analysts tracking the stock, all of them have given a buy rating on the stock at a target price of 50 per share. And this is on the back of their project commissioning of 2 projects which will see cash flow generation, and also the diversification into the solar power that continues, because recently they got an order of LOI to build a 200 megawatt solar power project which is worth 1,007 crore from Gujarat Vikas Nigam. So that's on NHPC, trading up around 1.8% as we speak.
Okay, that's NHPC for you all. But on that note, viewers, we're going to slip into a very short break. Don't go anywhere, because we'll be back with more stocks after this break as well.